Okay, so we've got markets going down. Not crazy, but going down. Yeah, the Nasdaq was up, but forget that. That's playing in the top. We have interest rates going up. We have the dollar index. Okay, it was up very slightly, but it was red at some point and it bounced very nicely off support. So actually, it's stronger than it seems. Commodities down across the board. Gold and silver flushing key levels. Gold in particular, silver already had, and I already said in my last video, which wasn't viewed but wasn't very well advertised, to be honest. Silver, that support on the descending, is not the support you expect because gold will probably go lower. The dollar may rally a bit more here. And I can't see silver holding what should be significant support. That's why we'll get to that later. But very important stuff. Now the miners will follow the gold and silver. So same goes for the miners as does for gold and silver. It's all about the dollar, and the dollar is starting to pay attention to interest rates also. So we have a lot to cover. This is not your usual sort of let's cover the sectors. This is getting a bit more serious, in my opinion. But we start in the same chronology. So let's start with the S&P. S&P, it looked okay yesterday. Looks trashy today. I believe today more than yesterday because the banking stocks also look extremely weak. Now, yeah, they're only down 1.5%. We will get to them, but they're very, very close. I think they're one day away from making flushy lows. One or two banks could go bankrupt tomorrow. We also have the debt ceiling. I know they're gonna last minute authorize the debt, raise as usual, but it could play a role. Okay, S&P closed at low of day, closed at low of day. I think tomorrow we venture to this level at the very least, 409. But to be honest, we'll probably close below it. And if we do, we venture all the way down to the 404 zone. I don't know if we can get there in one day, but I think we are going to visit the lows in the S&P, whether it's today or tomorrow. Nasdaq, yeah, it looks good, but to be honest, all other things considered, it cannot go up. I know it's been going up regardless, but it's done now. Nice little bit of a top here. Can you see how we close near the highs of the last couple of days, or at least where it tagged? I think that's quite a lot off the highs. I think it's going to go down tomorrow. So the Nasdaq, again, a bit of a superhuman at times, but those days are numbered. And remember, this ascending line, as soon as it loses it, it's toast. So, and you could have one massive bearish candle, and then the next day we're touching and maybe closing below the ascending. So don't think the Nasdaq is too invincible. It's never more than 2 days away from the beginning of catastrophe. So anyway, S&P, I'm looking for it to go lower. Nasdaq, I'm looking for it to go lower, not as obviously bearish as the others. Look at the Dow Jones. The Dow Jones has been weaker than the S&P. I've said that. But look at this. We closed, and I said in my last video, but look, closed at low of day. Obviously, we're going to visit lows tomorrow. In my opinion, we are going to close below this low of day, like this level here. So let's call it 32,000, whatever, whatever, 850. So close below that, and we are going to go visit these lows, not in one straight line, but yeah, Dow Jones looks horrible, down 1%. The Russell looks not as bad, but still terrible. Closed at low of day. And I remember making a video, was it today, this morning? I made it at the wrong time, but I said I don't trust this close here, which was kind of popping out of the descending because I had my line like this. I said I don't trust it. It's the Russell. You need several days. You need to close above 176. And lo and behold, look at that. We tagged it one last time. I went all the way back down, closed at low of day. To me, tomorrow we visit this low. We go to 169. At least we tag it. We might not close below it, but I think we're gonna flush. I saw some selling in the banks. I just feel like this is the moment. I don't know. I really do feel like it. So watch out for the markets tomorrow. It could get really ugly. I need to check the news actually. See, there's always one or two things, home sales or something. There's like 2 or 3 news events every day now. So maybe some Fed speakers too. All right, banks, XLF. Remember, this is the senior banks, so not going to be the most wobbly of ETFs. But look, close at low of day, doesn't look good. Probably going to venture and touch the low. I don't know if it's going to be tomorrow or the day after, but looks bad. And think about what the market's done, rallying, the Nasdaq rallying, even the S&P to some extent rallying, hovering near its high, is going to put in a bit of a head and shoulders or whatever pattern you want to call this. But look, after all that rallying, the XLF is here, ready to roll over with the others. It's going to flush. KBE, nowhere near as strong as the XLF. Look at that. Will it get to 32 tomorrow and touch this low? Of course it will. Will it close below it? Yeah, it will. Next day, back down here. That's what I think. KRE, same thing. It is supposed to be a weaker ETF. I think they're pretty much in line with each other. So, you know, can we get down to this low? Is the little dead cat pounce done? Yeah, I think it is. Watch out for the banking stocks. You know, even PacWest, for example. Oh, look at that, just totally following the KRE. They're all, I mean, okay, you got some senior ones, but just watch out. And there's like 4 or 5 other regional small banks that I don't have here that I should. So watch out. I think the banks are going to take down the markets. I do. And you know what? It might not even be the banks. It might be the debt ceiling. I don't know, but it's just interest rates. It's, oh, there's so many black swans. You can't even see the sky, but still, I think we're going down. And I said that for a while, and I think it's happening now. So let's look at the rest of the chaos, because today was more chaotic than some people think, I believe. Let's look at interest rates 1 year. Now, I've been saying the 1 year is the strongest one. It's a little, the chart pattern is different to the 2, the 5, the 10, and the 30. It's really a lot stronger. And, you know, this ascending has been working well. And again, you know, look at this. I said in my video, I said it's going to keep going up. It kept going up. I think, you know, can we close above 5%? Sure, that can be done any day. It can be done tomorrow. And once it's done, once the 1 year closes above 5%, it will go to the high. It will go to test 5.3. And then we're right back to where we were, which caused the entire banking chaos, except now we've got more debt. We've got banking cracks already happened. So it's not like people think the banks are invincible. We know they're not. We've got the FDIC that cannot cover all the banks. And the only way out is to print. And it's the same vicious circle we all know about. And you've got inflation in the background, so you can't just print. So it's starting to get serious, you know. I mean, it's been serious for decades, but now it's getting, you know, got de-dollarization, geopolitics, the Russians are, you know, going to win the Ukraine war. It's time to stop buying, you know, the Nasdaq stocks and start time to get serious. Do you get into cash? Do you get into gold, silver? Do you get into bonds? Do you short? Do you buy some VIX? Do you, you know, you got to think like that now more than. But anyway, the 1 year, watch out, 5% any day. Touch 5% tomorrow? Yeah, sure. If not tomorrow, 2, 3, 4 days, sure. When we close above it, 2, 3, 4 days later, we're testing 5.3, you know, and then you've got the Fed interest rate coming up. So anyway, pay attention to the 5 year on the way up. The 2 year, you know, I said I felt like the rates want to go up. Yes, they can go down any moment because there's a panic and people buy bonds. You know, what happened here, this crash. But at the moment, we've got this pattern going on, the will to go up. And we've got the 2 year closing above this descending. Next stop, next resistance. Okay, we're not going to go up here very quickly, but it starts with the 1 year and then it happens very quickly to the 2 year. And the 2 year needs to catch up with the Fed funds rate. So I see us moving up in yields until something breaks, people panic, buy bonds again. But for that, there's an alternative. There's gold also. 5 year, same pattern. Okay, it's a bit weaker, but still we closed at the descending. Actually, we closed above the descending. I just didn't draw it well, but 2 and 5 year, same pattern. 10 year, okay, we didn't close above it, but you can see the trend. Imagine the 2 year makes a run tomorrow or this week to end this week, or let's say the 1 year starts to run at 5%. The 2 year, well, that's going to be running to do 4.25, 4.3. The 5 year, well, that's definitely going to be above the descending breakout. So that's confirmed. The 10 year, that'll be above descending breakout, going also for 3 point, whatever it is, 65. The 30 year, well, the 30 is actually stronger than the 10 year and the 5 year. So that'll be going to 4%. So you've got the near term yield, you know, the near term rates and the long end of the yield curve going up, and you've got this sort of middle part, the 5 and the 10. Well, that's going to be forced to go up anyway, because it doesn't matter which way is, which side of the yield curve is the tail of the head, it's going up. So this will obviously go up. So basically yields will go up. So watch the 1 year and watch the 30 year. You're covered that way. And obviously that means TLT goes lower, unless or until something cracks. And then we get the same reaction as we did, when this smash happened. I suppose maybe that smash will be something like a bigger bank going down. So maybe one or two small banks go down. We have a bit of the usual reaction. Bonds get bought, yields maybe come down a bit. But then if they drift back up again, maybe we need something like, I don't know, Deutsche Bank or Citi or Wells Fargo. So watch out with interest rates. I know they were a bit boring during this period where, maybe other assets were doing better, but it's time to pay attention to yields. Okay, dollar may even be more important. Look at the breakout in the dollar. I mentioned this zone. It did it. We didn't retrace. We just went sideways after a big move here on Monday. And today, look at this. Doesn't look like it's that significant, but look, we have a tail touching prior resistance, acting as support. Normally, it touches it, it goes, it takes 2 or 3 days and goes back up. But we had quite a strong bounce off that support, so much so that we actually closed green, not by too much. But look, tomorrow we could easily take out, let's call it 102.8. Let's say a close above 102.8. Well, then we're just going to go past 103 and start running up. And then, people start zooming out and saying, okay, wait a minute. Maybe the dollar goes up now. Maybe it goes up for more than we think. And if you look at things like gold, and we're going to get there, we have a long way down to go in gold. A lot of people are in gold, huh? So this dollar move up could squeeze some commodities more than others. So watch out. Obviously, it can be a head fake. It comes back down, but I don't think so. I think the dollar is going to go up. Now, what happens if the markets go down? There's a bit of panic. The dollar keeps going up. People say, okay, now the dollar's a safe haven trade, which it wasn't during the first panic of the banks. Maybe it will be now. It's just an excuse for basically the chart doing what the chart was going to do anyway. So yeah, I'm watching the dollar and I'm just watching out for basically a continuation of a move higher. Fundamentally, should it be going up? Doesn't matter. No, clean this shirt out of the dirty basket. Yeah, it is. In times of crisis, it should be bid. It wasn't before. It can be now because the chart permits it. So anyway, you see the technical breakout. You see the descending breakouts on both accounts. There's 3 trend lines it breached out of. Trust me, traders are watching now. Maybe 1 or 2 of mine they don't care about, but overall it counts and it's strong. You can see it bounced off prior resistance. So for me, it's very strong and adhered to technical patterns perfectly. So watch out, DXY going up. I'm not going to look at the currencies because it's reflecting the DXY and I want to keep it short and sweet. Let's move to commodities. Copper, smash. This looks a bit like silver, doesn't it? Big move down, a little bit of a bounce on supports. Okay, the support for silver is a descending, but same thing. Bam, smack right back down again. And now, and I said this in my video from this morning, which I should have published yesterday, but I said we could have a smash and it closes below ascending, which we've kind of got today. Now, I don't know how precise my ascending is because I'm using a fat line. I want to use thinner lines for just this reason. Remember, it doesn't have to be too perfect. Now I could say it hasn't breached it, but it doesn't matter. It doesn't really matter. Even if I use this, I think that if the dollar goes up, copper goes lower. Very simple. And copper's not exactly that strong. If it does curl around here still, then you could say ascending support is held. If it starts to keep flushing, then I think next support is here in case you're trading it. I'm not in copper, by the way. I'm sure some of the miners I own also collect some copper, but that's not why I'm in it, and it's not going to affect the stock price of the miners I hold. So I'm not really in copper, but that's my 2 cents. You know, it could bounce off this ascending. The ascending is still roughly there. But if it continues to accelerate lower, which I think it would do with the dollar going up, then you've got this 3.55 zone. After that, well, I don't know, 3.3 somewhere. I'll look at it then, but so far I don't need to do that. Let's look at natural gas. Natural gas, very exciting. A lot of people talking about the breakout, me included. And then by the end of the day, it's red. That was surprising. I did think it was going to close green, but it did give off a lot towards the end. So by the close, I wasn't surprised that it closed basically flat. A lot of resistance. Look at that though. In the end, resistance was actually the high of this wick. I thought it was 2.5, and to be honest, 2.5 did act as a bit of a resistance, because as soon as it took it out, it squeezed a bit. And what you really want is a close above 2.5, which we didn't get. I'm just going to leave resistance there. I'm going to remember 2.5. I don't need to add 2 lines. What we need now is a close above this 2.57, let's call it. Let's say 2.58, just to be sure. Maybe it was the dollar. You know, maybe the dollar going up just sold off all the commodities a bit more. So let's see. If the dollar keeps going up, maybe we'll have a small retracement. Even if we have a small retracement in natural gas, I think that the bottom is in. Yeah, I said it. I think the bottom is in. I think it wants to go up. I think I just got to zoom out now and then just to remember what's going on. It's also the right season to suggest the bottom is in. So I'm happy with my position. I think I'm in the green now, actually. Or maybe I was at one point during the day. But I'm not buying. Well, I'm not buying unless we flush 2.1, which I don't think we're going to do. But I'm not going to add. In fact, I prefer to keep my ammunition for a drop in the miners. But yeah, looking for a move higher, eventually close above 2.58 and then a run to 3. Very simple. Let's just see how the dollar rally affects natural gas as well as the others. Oil, another one that was red on the day. Was it because of the dollar? Probably. I'm not actually too sure. There was some oil news, but look, the point is, and we do have a bit of descending in play here, I believe. Well, I'm not going to do it. Yeah, oil needs to hold. You know, if we start to flush anymore, if we start to have a close below 70, I mean, we did close at low of day today. Remember, oil can follow the markets. What if we have a crash in the markets tomorrow? The dollar's going up, interest rates going up, everything's going down. Markets, oil, commodities. What if we have oil below, 69? We could just have a flush all the way back down to 65, 64. And if we do, we have a bit of a triple bottom, which rarely holds. Now, it's not going to go and flush down in one go. And actually, even if we close, now, if we close below 64, it's going to accelerate lower. I don't think it'll become this hammer fake out. I think it would actually go lower, like into the 50s, which would be a serious buying opportunity. But, you know, for now, we just got to watch out and see if 64, just below 64 holds. Oil needs to reverse though, and I think it's a good buy where it is. I think it's a good buy even lower, and I think later on this year we're in the 90s and hundreds actually, at least the 90s, if not later. You know, over 100. So it's a good buy. You could pretty much double your money in oil, just oil, the commodity. But yeah, let's see how the dollar affects it, and let's see if it follows the markets lower. So just another commodity to keep an eye on. Uranium, the one that finally broke out just at the wrong time. I mean, it's good for me because, like I say, almost in every video, I'm looking to get into uranium. I feel like I've missed it. So I like this flush. It's a shame, you know, it's a shame for the bulls, not for me, but it was, you know, it had a perfect breakout, mini breakout. It curled perfectly. And then today we had the dollar up, a bit of a panic sell-off in commodities. Not really, you know, but across the board, it was red in commodities. And I just feel like it was the dollar's strength, you know, it was the fact that it bounced off that support, and interest rates going up and markets going down, the banks going down. And I think it's in anticipation of tomorrow. I think we're going to get a bit of an acceleration to the downside tomorrow. I don't think news will really stop it. It may even exacerbate it. And I'm happy to see uranium go down with the rest of the commodities, with the markets. And maybe if we have more of the same, dollar up, markets down, etc., maybe we just have a big couple of candles that take us all the way back down here, regardless of the technicals. You know, we can have that. We know the market can do that. All right, gold and silver. Now, gold closed below 2000. All right, now I'm not going to be some blind bull and say, oh, it doesn't matter, the fundamentals. You know, obviously gold is great, etc. But a lot of people are in gold. A lot of people who are not diehard gold bulls are in gold, because there aren't that many alternatives, because gold is a great buy for lots of reasons, every reason. But technically, overbought, closed below 2000, despite trying to hang on. We have 1970 or just above 1970. I've mentioned this. Everyone can see it. We can probably get there tomorrow. What if the dollar starts to rally, like really rally? Like make new mini highs and look like it's going to go to 103 and 105.5, those zones. Well, then gold's going to be closing below 1970. And then it starts to look really bad, really heavy. And then it's all about, oh, maybe the ascending will hold, and it probably will. But it doesn't look great. You know, we closed near low of day. It didn't close at low of day. There was a bit of buying last minute, but it's all about watching the low 1970s holding. It probably will hold tomorrow. But again, how does it react to the stock market going down, the banks going down, probably the same thing, and the dollar going up, and interest rates going up? So it's time to watch the bank stocks. The KRE can do that. The dollar index, you're probably already doing that. Interest rates, you should be doing that. And maybe even silver, see how gold and silver react to one another. But for me, gold, keep it simple. I think the trend lines I've drawn in are all correct. They're all there for a reason. It's not to make me look like I know what I'm doing. I do know what I'm doing. So let's see. This support should hold. If we close below that, I don't think we'll do it tomorrow. If we do, 1950 is a nice round number. To be honest, that's not the strongest support, but it probably will be like intraday support, so I'll leave it. 1937, that's the last, and also the high from here, so I think that's correct. And to be honest, if we're blowing past that, we've got the ascending just below, and that will happen in the next couple of days, so that should coincide with the ascending. So for me, the horizontal here and the ascending will probably coincide on the same day if we get there. On the upside, I'm not going to cover resistance because I don't think we're going to go up there in one go. If we do, you can see where I think that is. Silver, now I said for silver, you know, and I remember having this descending line in place when we were up here, when very few people had it there. Anyway, that doesn't matter. We blasted through that. That was great. We had a double top. We slammed down. There was no significant news. Like nothing really hit gold too hard on this day. That was really a silver smackdown. It's not manipulation. It was just a smackdown. Like technically the stops got triggered. Of course, there's manipulation, but when it's going up, it's not manipulation, right? So what did I say? I said this descending is not going to act as support. It would in other circumstances, but the smackdown just happened. We had a weak bounce, and then I saw the dollar index going up. I see gold maybe starting to close below 2000. And, you know, if gold closes below 2000, I'm sorry, silver can't hold. And that's what happened today. Gold closed, obviously, significantly below 2000, 1988. So silver closed at a new low, if you will, if you know what I mean. We went to new lows and we closed at the last low. What if gold's going to visit 1971, 2, 3? Tomorrow? Where's silver going to go? Well, it's going to have to go lower. Maybe we get to somewhere like here, 23, round number, you know? So that's why I haven't put in a trend line. You know, I could say, oh, here's a trend line. Round numbers, a trend line. Every 50 cents is a trend line. I'm not going to do it because it's going to be obvious when we get there. You know, I think we'll have gold determine where silver bottoms. Let's say gold starts to bounce at 1970. Well, wherever that is for silver, that's where the bounce zone is. But what I'm looking for is several days, you know, 1, 2, 3, 4, 5 days, something like that, where we sort of curl. You know, we made a low, we've tested it once or twice. Now we're creeping up. Okay, candle over candle. The low is in. Now you can buy a silver stock for a little 10% bounce, etc. Because by the way, when we bounce, we're not going to just go all the way up. We're going to come into resistance. And that's why I like to play. I like to sell into it and then get the sell wrong so it keeps going up. It's like a psychological hedge. But anyway, for me, the point is for silver, I'm not putting a support line. Obviously, the ascending that I've drawn is support. We're not going to get there. If we do, it's going to take like several weeks of mayhem. I think just watch gold. I've got my gold trend lines. They're easier to read, and gold usually leads the way. So that's it. You know, let's see how low gold gets. Let's see the impact of the dollar, interest rates, and the banks and the stock markets. That's my answer to silver via gold. All right, the miners are following gold, right? You can see the following gold, GDXJ, same, by the way, GDXJ and GDX, absolutely identical. Absolutely identical. Yeah, the GDX actually went a little lower than the last low, but, you know, pretty much identical. Gold, you can see how it's, but silver, the silver chart is way weaker. So for me, GDX and GDXJ are following gold, which is good. That means they're outperforming silver, which is good because silver is weaker. So it's good for those holding miners like me. To be honest, I'm pretty upset with myself because I bought miners up here also. I added, it was for the extended breakout. It's a rookie mistake. I shouldn't have done that. I've traded the miners quite well throughout this, but they're not here. And I kind of knew, I even suggested it, that I worry that, you know, it's a bit of a top. I'm buying pretty much breakout for extended breakout. It's just I thought that I had to do it because I thought gold would just crack 2,100 and then that would be it. You know, the miners relative to gold were really still cheap. They still are. In fact, they're even cheaper now. But you know, I've got a plan for the drop. I've got lots of sidelines and more sidelines coming in, more ammunition to deploy into the miners, but I have not bought yet. I don't feel like buying until I'm certain that, well, actually not gold and silver. I'm certain that the dollar dead cat bounce might not be a dead cat, but the dollar bounce is over. Once I'm sure, or more sure than I am now, that the dollar top is in, then I'll add to the miners, the gold and silver miners. So anyway, sorry, get back to the gold miners. Keeping it simple, a bit like silver, actually. I'm not putting too many trend lines. I want to wait for gold to finish going down and the dollar to finish going up, and then I'll add. But otherwise, the one trend line I can see is this zone, you know, like peak there. You can see here a bit of a gap. Here it's a little bit of a zone, but otherwise the real support is the ascending. So I just felt like I'd put one trend line in. It may actually be here, the trend line, but you know, I prefer to be safe on the downside. Anyway, that's where I put it. To be honest, it's not the most beautiful trend line. It's a rough trend line. So let's call it 31 on the GDX. GDXJ, I put one at 37. It's pretty much the same thing. You can see why, you know, they hit it twice here on the way up. A few opens and closes near there, etc., etc. But same thing, you know. And also, look, we had it's not a very bad close because we're still at trend line pretty much. GDX is actually below, but you know, you can definitely see the possibility if the dollar goes up and gold and silver go lower, you could see an accelerated move down. Now, how much of a move down is that, by the way? You know, 5-6%, that's a pretty big move. That's like 2 very bad days or one awful day. It can happen. It can definitely happen, you know, like one horrible day, gold down $40, silver down, whatever, $1.5, market crashing, dollar up, DXY up 1.8%. You'll get that massive red candle, you know, one of these. So that's why I'm leaving it a bit of room, you know. Um, all right, I'll finish very quickly on Bitcoin, very quickly. There was this hammer that was relatively bullish. We've had the bounce, but look at the resistance on this candle. Is the bounce over? Yeah, I think it is. Because because I don't think Bitcoin is necessarily going to go up if there's a banking crisis again. I think it's weaker than gold when there's a banking crisis, so it may do, to be honest, but it's just lost that strength that it's had recently. The chart is much weaker. We've got a head and shoulders and a double top. You don't need to know the patterns, but you can just tell. Imagine the buyers and the sellers. They finally pumped it here into the 30,000 and then smacked back down. They tried again, smacked down, and again down even lower. And then we ventured below this neckline. And now, really, you're going to rally now, even though after you've gone low? Nah, it just takes 1 or 2 more days, a close below 26,500, and it will accelerate lower. The algorithms, the people, the psychology, everything will play a role. And if we have the markets going down, the Nasdaq going down, maybe the Nasdaq will start taking Bitcoin down again. And again, look, dollar going up. They're always saying Bitcoin is inflation hedge or whatever. Well, they'll lose that reason too. So I think that the Bitcoin will actually be weaker and go down. I'm saying everything might go down here. We've got interest rates and dollar going up and basically everything else going down. I suppose the VIX is going up, but I deleted it because it's a broken and fraudulent indicator. So it's not worthy of my discussion. Anyway, look, that's what I think. I think things are getting a bit more different now. I think we've got more of a dollar up, rates up, everything else down scenario. We haven't had that in a while. And maybe that carries on until there's a banking crisis, and then we've got another jolt, where rates go all the way down because people panic buy bonds, and then you may have, gold, silver screaming up, and the dollar, I don't know if it reverses or it keeps going up with gold and silver because it'll be a safety play. Let's see. You know what I mean? I covered everything pretty thoroughly. I look forward to tomorrow. I think we may have fireworks tomorrow. But anyway, hope that was of use. Good luck. Good night.